Spencer, during this crisis period, how have investors' priorities changed? Are they more concerned with liquidity because of the risk? Or?
So I think investors have become more resilient. They learned their lessons from the crisis in 2008, and I think they've also seen a huge amount of government and central bank support through this COVID-19 crisis. So clearly there's been a disparity between the top tier names and the lesser tier names, and we've seen credit spreads fan out because of that. But while liquidity is important, I think investors had learned their lessons previously. I think definitely anything that's been liquid in the home currency market. So German credits into Germany have fared incredibly well in euros, met with very, very robust support, and traditional dollar names in the dollar market have been able to take out very, very large size.
Excellent. And for the borrowers that are big enough that they look at both those markets, how has the relative availability of dollars and euros compared?
It's a really interesting one, this, because you look at the market and issuance volumes are up massively year on year. So I think dollar SSA issuance volumes are up 40%. I think euros are up 60% if we include the sovereigns there as well. And naturally, the first port of call for issuers was in their home market. So euro-based funders naturally turned straight away to euros and dollar-based funders. So most of our supras who've been on the panel today would have most immediately turned to dollars, and both found good size available. I think euros did offer more duration at the beginning, but actually we've seen one of the biggest runs in 10-year dollars that we've seen for a very, very long time, actually, just given the steepening of the asset swap curve. So I think both have been available. I think issuers have tended to stick to their home markets primarily out of security to de-risk the transactions. But those who fund in multi-currencies are now just focusing on the basis swap between the two and taking the best cost of execution now.